Have you ever wondered how the commercial real estate market in New York is bouncing back? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. Today, we're diving into the resurgence of commercial real estate in New York City, often referred to as the Big Apple. According to Jay Neveloff, partner and chair of real estate in the United States at Herbert Smith Freehills Kramer, the commercial real estate market is witnessing a significant rebound. This resurgence is occurring despite the challenges posed by fluctuating interest rates and the evolving dynamics of office spaces. Neveloff shared his insights with Carol Massar and Tim Stenovec on Bloomberg Businessweek Daily, highlighting that the market is seeing a lot of transactions as investors look to reposition their assets. These transactions are not just driven by domestic investors, but also by international buyers who are eager to invest in New York's commercial spaces. The availability of capital is playing a crucial role in this rebound, as lenders have become more aggressive in enforcing their rights, pushing for deals to be completed. Interestingly, one of the most notable trends in New York is the conversion of office spaces into residential properties. While this isn't a new phenomenon, the pace has increased as more office buildings are being repurposed to meet the demand for housing. However, not every office building is suitable for conversion due to zoning rules and structural constraints. Nonetheless, this trend highlights the adaptability of New York's real estate market in response to changing needs and opportunities. When we look at the Canadian perspective, especially in regions like Kitchener-Waterloo, London, and Cambridge, Ontario, we see a similar trend where multifamily properties are gaining traction. The demand for flexible living spaces is driving developers to rethink the use of existing commercial properties. While the scale might differ from New York, the underlying factors of adaptability and capital availability resonate across the border. In conclusion, the commercial real estate market in New York is experiencing a dynamic rebound, fueled by a mix of domestic and international investments, as well as a strategic pivot in property use. As we continue to monitor these trends, it's clear that adaptability and strategic investments remain key to navigating the ever-evolving real estate landscape. Foundry Commercial and Crow Holdings have joined forces in a notable real estate venture that underscores the ongoing trend of converting outdated office spaces into industrial complexes. This partnership has led to the acquisition of a site in Irving, Texas, which is set to be transformed into a state-of-the-art industrial facility. This move is part of a broader shift in the commercial real estate sector as companies look to repurpose underutilized office properties to meet the growing demand for industrial spaces. The collaboration between Foundry Commercial and Crow Holdings is emblematic of the strategic adaptations occurring within the market. As businesses continue to evolve, the need for flexible and efficient industrial spaces has become more pronounced. This trend is not confined to the United States, as similar transformations are being observed in Canadian markets such as Kitchener-Waterloo, London, and Cambridge, Ontario. In these regions, developers are increasingly exploring the conversion of commercial properties to better serve the needs of modern industries. In the case of the Irving project, the complex is anticipated to be delivered by next summer, reflecting the swift pace at which these conversions are being executed. This rapid turnaround highlights the efficiency and agility that developers are employing to capitalize on the demand for industrial spaces. The partnership between Foundry Commercial and Crow Holdings is a testament to the potential and profitability of such ventures, as they position themselves to meet the evolving needs of the market. From a cross-border perspective, the office-to-industrial conversion trend offers valuable insights for Canadian markets. As companies in Ontario look to optimize their real estate portfolios, the success of projects like the one in Irving can serve as a model. The adaptability and strategic foresight demonstrated by Foundry Commercial and Crow Holdings can inspire similar initiatives in Canada, where the demand for industrial spaces continues to grow. Stone Lake Capital Partners, a real estate private equity firm based in Austin, Texas, has announced the sale of a substantial portion of its industrial real estate holdings in El Paso. This transaction is part of a larger $920 million deal, which includes 91 industrial buildings totaling 7.6 million square feet spread across several United States cities. At the time of sale, the portfolio had a 93% occupancy rate with 190 tenants. Although the buyers were not disclosed, Stone Lake confirmed that it exited the portfolio through 13 separate transactions. Despite this sale, the firm maintains a significant presence in the region. Stone Lake continues to own a sizable industrial portfolio in El Paso as part of its 19.3 million square foot holdings across 12 Sunbelt markets. As we turn our focus to Hampton Roads, Virginia, we're seeing a fascinating trend that's reshaping the commercial real estate landscape: the rise of flex spaces. This trend highlights the increasing demand for versatile work environments that can adapt to the evolving needs of businesses. According to a recent report by CBRE, flex space now accounts for over 15% of commercial leases in mid-sized metro areas, a significant increase from just 5% a few years ago. So, what exactly is flex space? Flex space, short for flexible space, is a type of commercial property that allows for multiple business functions within a single unit. It's essentially a blank canvas, offering an open-plan design that businesses can customize to suit their specific operational needs. Whether it's an office, warehouse, showroom, or a combination of these, flex spaces provide the adaptability that modern companies crave. The popularity of flex spaces is not limited to startups and e-commerce brands. Across various industries, from logistics to design, and from marketing agencies to health and wellness providers, businesses are recognizing the long-term value of these flexible work environments. In Hampton Roads, where the local economy is driven by sectors such as military, maritime, tourism, and technology, the demand for adaptable space is on the rise. Investors in commercial real estate are also responding to this demand by repurposing older industrial buildings into sleek, multi-use flex hubs. This transformation is broadening the range of modern, ready-to-move-in spaces available, offering businesses the opportunity to settle in without the hassle or high costs of constructing from scratch. When comparing flex space to traditional office settings, the key differences lie in the freedom, cost efficiency, and adaptability that flex spaces offer. Flex spaces are designed to be whatever a business needs them to be, featuring multifunctional layouts, open and customizable areas, and strategic locations with easy access and ample parking. The benefits of flex spaces extend beyond mere cost savings. They foster improved collaboration with open layouts that encourage teamwork and creativity. They also offer scalability, allowing businesses to grow without having to relocate or sign new leases. Moreover, many of these spaces are move-in ready, minimizing upfront investments and construction time. From a cross-border perspective, the rise of flex spaces in Hampton Roads offers valuable insights for Canadian markets such as Kitchener-Waterloo, London, and Cambridge, Ontario. As businesses in these regions explore optimizing their real estate portfolios, the success of flex spaces can serve as a model for adaptability and strategic growth. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.